So we have the Nvidia news, Weiss. You know, it's obviously sinking on the export rules, the charge, $5.5 billion. Piper Sandler takes the price target to 150. Raymond James takes it to that same level. You sold half your position today, this morning, on this news?
I did. And as you recall, I put it on about a week ago. And I said when I was on the show last that it was a trading position. So the reason for holding on to the trading position at this point escapes me. Now, on a day like today, which is part emotion and mostly reality as to what the future may hold for them in terms of perception, we don't know factually what it holds. I just said, let me get rid of half of it and wait for a better opportunity to get rid of the rest of it. Because my bearish sentiment on the market has not changed. And as a matter of fact, it's fortified by announcements like that. Nvidia will not be the last one to do this. Well, AMD already did.
I mean, AMD's getting hammered today, too.
AMD will, and you'll see others that'll do it.
Micron, Marvell are down.
It's going to be across the board. It's going to be across the board. And there's just, having attended, a few different conferences, small conferences, haven't spoken to many bankers, many PE people, many single-family offices that invest directly in the cap table, CEOs. Nothing is going on. Everybody's frozen. And what you're using your capital for is to protect the companies you already own. If you're a CEO, you're using it. You're not spending it. Capital, expenditures are grind to a halt, except necessary ones. And frankly, I think we're going to see this when the hyperscalers report and talk again about a slowdown in cloud spending. So, look, this just is another warning sign, and I think that plenty of trouble ahead.
I mean, are you suggesting that chips at this moment are, I don't know if the right word is uninvestable, but unanalyzable at minimum, just because you really just don't know where this is going?
Yeah, and there's another element. So with the embargo, and that's my term, but it's accurate, that China's putting on rare earth, and with Ukraine not mining rare earth yet, and with the U.S. sole mine already committed, frankly, comes on the end of the year, you can't make semis without rare earth. So even if you've got facilities up and running in the U.S., which you really don't, I mean, you got Skyworks for something, et cetera, you're not going to be able to make chips anyway. So yes, so they're unanalyzable. It doesn't mean I'm selling Taiwan Semi, because ultimately we will get through this. I'm not buying more because I'm full, number one. I wouldn't buy more anyway, because I think you get a better point of entry.
Joe, you have Nvidia, obviously. What do you make of this move, selling half the position on this news? Nvidia's down 7% right now.
As Steve said, it's a trading move, and in a very mercurial environment, that's exactly what you're doing right now. You're trading. Everything is mercurial right now. The policy, the market, a read on the economy, soft data, hard data, retail sales comes out, people are buying cars, people are buying electronics. Is it because the economy's good, or is it because they're getting ahead of the tariffs?
Yeah, front loading.
Right. We talked about on Monday semis, technology leading the market higher. Now you have a day where they pull back. So I think in totality, what does that all mean? I think you're stuck with a trading range. I think we've seen the upside. We've capped the upside for now at that 5480 to 5500 level. We've defeated what was 6 consecutive days where the S&P, the intraday low, was higher than the previous day. And then if you look on the downside and you say to yourself, it's a very challenged environment. I keep using the word mercurial. Why not think we're going lower? Well, because you're probably going to get a tweet at some point.
Yeah, so why don't
you're probably going to get some reaction from the Treasury Secretary.
So then why isn't it, Kevin, a 22% discount year to date on Nvidia is a buy? Relative to what their position is, what their position is going to remain to be, the fact that the hyperscalers suggest they're still spending all this money, there's no reason to believe that demand's going to tail off anytime soon. Why isn't $104 and change a gift?
I think it is. I think we had a better gift last week when I think it got down to 88. Maybe that was a little bit more attractive there, but it's very difficult to pick bottoms and tops. So to Steve's point, from a trading position, this could be dead money for another year in a range-bound stock. But I think, to your point, Scott, at 104, when you look at all of the metrics that they can predict, and there's a lot that they can't, and your word unpredictability, I may have to steal that and borrow it because there's so much uncertainty. But yes, if you're an investor and you've got a little bit more than a few month time frame, I think 104 is a buy.
What do you think of the the chips here.
Yeah, I think the word you used, Scott, uninvestable, for now it actually is the case.
I wasn't, I said unanalyzable. Well, I don't know if you would go as far. I mean, that's not for me to say, but
for me,
you
at
do
the
this
moment,
for a living.
For me, at the moment, they are actually uninvestable, and it's for a couple of reasons. You know, first of all, chips are completely a bargaining chip in this trade war, and we're seeing that on full display today. And then there's this longer-term consideration, I think, of this U.S.-China decoupling, and there's a long-term intent to not let those chips go to China. So the other reason why I think chips at the moment are uninvestable because they're highly cyclical, and so they're going to get caught up in what Steve is talking about, which is lack of capex, lack of any sort of cyclical momentum. And if you look at the last instance of the trade war in 2018, chips really did take it on the nose. They were down 35%. So I think we may still have more downside to go. And yes, I like the valuation, which is the lowest levels. But in a market like this, you can't look at valuations purely. You can't look at technicals if you can't identify a catalyst. And right now, I can't.
Yeah, and I'd say valuation's a moving target because this things change. So, look, I think you can predict the playbook for this market is that you'll see agreements in principle announced with former partners, but counterparties in trading. Market will bounce, but there's no there with the agreements in principle. It takes years to negotiate a trade agreement, but you'll get that headline bounce, and eventually the market will tire of it. Right, so it's going to be what's the new flavor. So I don't think
there is a very positive, still fundamental backdrop around Nvidia.
CapEx.
There is, but you're also seeing a slowdown in CapEx to data centers as well. That's an end market, and China is a huge market for them, right? So China's had this playbook to wean themselves off dependence.
You're not really seeing that much of a slowdown yet, though. I mean, you have talked about potential. If things go bad with GDP and the growth in the economy, then of course you could potentially see it. But you haven't really seen definitive pullback in spending from not from hyperscalers, from the hyperscalers.
You're seeing delays. You're seeing, more importantly, like one company, one CEO I was talking to, who's looking to build out a warehouse, not a data center warehouse, switch their supply chain, their vendors from China to India. And they've been told that those supplies, which are critical to them, are going to sit on the ocean for 4 to 6 months. So it's going to take a while to get things here.
The juicy part of this story is a Reuters exclusive report today that suggests Nvidia didn't warn at least some of its major customers in advance about all of this, and it was told a week ago. That's according to a couple of sources that Reuters cites in what they say is an exclusive report. It leads to the question, of course, what did Nvidia know and when did it know it? Who better to chase that down than Christina Partsinevelos? Do you have any insight in that very question?
Yeah, the answer is Chinese hyperscalers. They've been apparently anticipating these restrictions, and I say that because they've been stockpiling H20 chips before this ban was even announced. Supply checks, and this is not coming from me, but from sell-side research, has confirmed big players, which we would assume Tencent, Alibaba, were actively purchasing these H20 chips throughout this entire quarter. And there was even a report from The Information indicating $16 billion worth already sold to China. I'm unsure if that is $16 billion, but we could assume it's in the billions. So to your point, that Reuters report saying some Chinese customers are frustrated because Nvidia didn't warn them despite knowing a week in advance, this really suggests two things, Scott. Either Nvidia selectively informed major customers, which would explain the stockpiling, or was genuinely surprised by the shifting White House position. Because keep in mind, Jensen Huang, the CEO, was just in Mar-a-Lago at a supposedly $1 million dinner. But analyst estimates are coming down today across the board, lowering price targets. And I know Weiss was just talking about how much China represented of Nvidia's total revenue. It was about 13% fiscal 2025. So this write-down of $5.5 billion is substantial and indicates a big thing, that Nvidia really has little confidence in securing export licenses, which could take up to a year to process. In other words, a ban. And I'm using the word ban. I took that from UBS. So a lot of people agree with me. And Mizuho calculates this loss at about $7 to $9 billion, which is approximately 5% of total July quarter revenue, which could be explaining this 7% sell-off and maybe why, Scott, to your question, why people may not be interested in buying into the stock just yet.
Yeah, it's really interesting story in the total of what we're talking about today. Christina, thank you very much. That's Christina Partsinevelos. We'll watch the 7% decline there. By the way, another lower target for Nvidia, 160. B of A has taken their targets down like across the board for semis, which have a lot of rain clouds over them today. I mentioned AMD, Micron, Marvell, ASML. They missed their orders expectations. The CEO suggesting that U.S. tariffs are creating a lot of uncertainty. No kidding. Reuters again says that tariffs may cost chip equipment makers more than $1 billion. Those are what the industry is estimating. Lam, Applied, all of them. KLA. You've got AMAT and KLAC, which, by the way, are part of that Bank of America target cut.
They are. Look, collectively, universally, when you look at the semiconductors, you have to question now, does this change the entire AI narrative? And I think there's some uncertainty in answering that question because you don't know if the policy remains entrenched. Is this something that is going to be permanent, or is this part of a temporary negotiation? I don't know the answer to that. Maybe you guys know the answer to that as well. But I think if you could unlock that answer, then you could make a clear determination on where we're going. If, in fact, it's permanent, it's very obvious to me that a 166 price target for Nvidia, which is literally 58 or 59% higher than where we are here, I mean, that is extremely ambitious. So,
well, what about the others? The AMATs that you have, which the target goes to 190 at B of A, KLA goes to 805 as part of that call as well. And Lam goes to 90.
Right, but Nvidia is the leader. Nvidia leads everything else. I don't think you're going to be able to see a bifurcation in terms of the performance. Wherever Nvidia goes, it's going to drag the rest of them down with it. So you're looking at the semiconductor industry in totality when you're making a determination where you want to invest there. If you want to say, okay, I pick a winner here, I could look at KLA Corp, I like the valuation, I understand that. But there is so much uncertainty in front of us right now surrounding the AI narrative, surrounding the CapEx. It's not clear, permanent, temporary, which direction do you go?
Yeah, Scott, I would add that maybe there's a little bit of good news here, which is, yes, China's 13% of Nvidia sales right now, but that number was a lot higher several years ago. And I think that's true also for some of the other semiconductors. So in a way, we have de-risked some of that foreign revenue exposure. So we can take some solace in that. But the thing that still keeps me cautious on the likes of Nvidia and others is that I think the hyperscaler spending that Joe is talking about, I think that is very much a question mark, because if you look at some of those largest companies, they're not immune from a consumer slowdown. They're not immune from any sort of retaliation from other countries. So I think they're going to start to worry about the top line. And what do you do when you worry about the top line? You think about cutting your CapEx. So that's why I still say for now I need a positive catalyst, and I haven't seen it yet.
I mean, there's been so much gloom and doom, Kev, around the tech space of late. Wells Fargo Investment Institute has seen enough. Okay, they've seen enough of the negative. They upgrade the space to favorable. They had it at neutral. Everybody seems to have it at neutral right now, at least. And they say, quote, "We believe the sector's quality characteristics will serve investors well, while the AI tailwind likely has legs to continue to drive above-market sales and earnings growth for years. In our view, the sharp sell-off provided a potentially fleeting opportunity to add exposure." What do you think? Is a lot of these stocks, from Tesla all the way down, are down a bunch from their 52-week highs? Is enough?
I mean, they perfectly said it. For investors, there's an opportunity here, and there is. Right. So last week we bought Apple at 177. We bought Meta at 510. I mean, I think you can lean into these positions here if you're willing to hold them through volatility. Because Joe's point is perfect. We don't know what the outcome is, and that's what makes it so much fun. If we had all the variables, then we would know the outcome. But I think the old adage of wanting to make investments and buy cheap stocks is something that you want to lean into here at least a little bit. The biggest mistake you can make is trying to time it or to go all in. So just follow our lead. We put a little bit in. If it goes down another 10%, we'll put a little more in. I don't think any of these businesses are in jeopardy of really rolling over at this point, because to your point, Scott, they're down a lot.